Hi, welcome to another video in our crop insurance series. Today we'll be talking about the Non-Insured Crop Disaster Assistance Program, or NAP. We've talked about this program before in past webinars and videos, but we just wanted to give it a video on its own. So what is NAP? Well, NAP is a program administered by the Farm Service Agency, or FSA, and it's financial assistance to growers of any crop insurance. Welcome to another video in our crop insurance series. Today we're going to talk about Non-Insured Crop Disaster Assistance Program, or NAP. This is a program we've talked about in the past in some of our webinars and other videos, but we just wanted to give it a quick video on its own. So what is NAP? Well, NAP is a program that's administered by the Farm Service Agency, or FSA. And this is financial assistance to growers of any crop without available crop insurance. So this is for crops that don't have a multi-peril crop insurance policy available for that crop in your county. And so this protects against losses caused by damaging weather events, natural events, and problems that arise from those events. Multi-peril crop insurance does have some protection against changes in price or losses of markets. Whole farm revenue protects against loss in revenue, whether that's due to loss of a market or price. So this one is only for disasters, weather events and natural disasters. So why should you consider NAP? Well, NAP is great for small farms and limited resource growers and growers that have few commodities. So there is a waiver of service fee for and a 50% premium reduction for beginning, limited resource, socially disadvantaged, and veteran farmers. So if you fit into one of those categories, choosing NAP, you might have either access to higher coverage levels than you would, if you didn't have that waiver of the service fee or the premium reduction. So eligibility, it's available to individuals and entities. So if it's like an LLC or a corporation that has crops they want to insure, but they just have to have an average adjusted gross income below $900,000. So this would certainly apply to most, family farms or smaller operations. A lot of our specialty crops and horticulture growers in Kentucky. And this must be crops that there's no available crop insurance, like we discussed earlier. And so those multi-peril crop insurance policies are for single crops in specific counties. So a lot of horticulture crops are going to be eligible for NAP because there's not many horticulture and specialty crops that have multi-peril crop insurance policies available for them. And to be eligible, you must be able to report the name of your crop, the type and variety. You'll need to report locations and acreages of the crop, and that would be reported after planting. You'll need to report date of planting, the intended use of commodities. So do you plan to sell it fresh or frozen? Do you plan to sell direct to consumer, or are you going to sell to wholesalers or grocery stores or restaurants? And then you'll need some post-harvest quantities and qualities. So quality refers back to the intended use. So were you able to sell it the way you had intended? Or did you have to completely not sell it at all? Was it marketable? Was it unmarketable? Did you have to salvage it into value-added products instead of selling it fresh, those types of things. So all the available crops or eligible crops would be anything that's grown for food, livestock consumption, grain or forage, and then fiber. So that includes cotton and hemp as well. And it also includes crops grown in controlled environments, so ornamental plants, cut flowers, even mushrooms. And then there's some that don't really fit into any of those categories. That would be honey, maple sap, sorghum, aquaculture, Christmas trees, and sod. So with NAP coverage, there's several different options you can choose from. These are, based on how much coverage you're wanting, how much you're wanting to pay. But the basic NAP coverage protects 50% of yields at 55% of the price. And so that if you were to lose 100% of your crop, you would have about 27.5% of your crop value returned to you. So that may not seem like a lot, but it could be, enough money to replant next year. Then the other coverages are buy-up coverages, so you do have to pay a premium for those. The basic coverage only has the service fee, but the buy-up coverages do have premiums. So the buy-up coverage range from 50% all the way up to 65%, and that's yields. So 50% of yields up to 65% of yields. However, all the buy-up coverage is at 100% of the price. So the percent you choose as your coverage level is the amount of your total crop value that will be returned to you. So if you chose 55% coverage and you lost 100% of your crop, you would receive 55% of your crop value. If you're selling organic or you have a direct market price, that can be chosen as well under buy-up coverage. So if it's available, you are able to use those prices to hopefully get closer to what you're selling your crops for. And then also if you have a contract, either with maybe a school or a hospital or a grocery store or a wholesaler, those can also be used instead, so you can guarantee those contract prices. I did mention the service fee before. So with the basic coverage, all you're paying is the service fee, and that's either $325 per crop or $825 per producer per county, and it's whichever one is lower. So if you were insuring 3 separate crops in the same county, you wouldn't be paying 3 times that $325. You would be paying the $825. So you do have a different service fee and a different premium per crop. So if you're growing a couple crops that you want insured, you would have a different policy for each crop. Now, I can't give you an estimate on the premiums because those are operation specific, and they will depend on your crop acreage, your yield, the coverage level you choose, and the market price for the crop you're insuring. But remember, there is that waiver of the service fee and the 50% premium reduction for beginning, limited resource, socially disadvantaged, and veteran farmers. With the NAP, these were this current growing season's application dates. So all of these have passed, but we can give you an estimate about when these horticulture and specialty crops might have application dates for next year's growing season. So strawberries in 2021 for the 2022 growing season, that application was due on September 1st. For flowers, mushrooms, sod, Christmas trees, that was September 30th. November 20th was the application deadline for most perennial fruit and nut crops. So that would include, fruit trees, perennial bushes, and then nut trees. Honey, the deadline for that was December 31st. And then most recently was the vegetable and annual fruit crop deadline, which was March 15th. And March 15th is a common deadline for many crop insurance policies and programs. So that's the important date to keep in mind. Now, if you were to have a loss and you had NAP coverage, you would have to submit a notice of loss and an application for payment form within 15 days of whichever of the following occurs first. So natural disaster occurrence. So if a storm comes through and destroys your crop, you have 15 days to, fill out those forms with the FSA office. Final planting date if planting was prevented by natural disasters. So maybe there were heavy storms and flooding and you couldn't get out there and plant. So you'd have 15 days after you were finally able to plant. If there was, there were storms or for some reason damage occurred, but you didn't notice it, you have 15 days after you notice the damage or the loss. So, maybe if insects were, or a pathogen was caused by, flooding or different weather events, once you notice the loss from them is when you would apply. Or the normal harvest date. So maybe you didn't realize you had heavy loss until after you harvested. Then you would need to fill out those applications. And then there are some hand harvested crops and perishable crops that need to be reported within 72 hours of when the loss becomes apparent for whatever reason. And so these are going to be things that a lot of horticulture crops may fall under, because these are things you're harvesting, multiple times a week or checking on multiple times a week. And the FSA would tell you that your crop is one of these when you fill out the application. So this is not something you would need to determine yourself. And we just want to remind everyone about our crop insurance webinar series. So our next one will be a grower panel on April 12th. And then in May, we'll have a step-by-step work through of an imaginary farm, going through the process of determining some of these premiums and looking at options for crop insurance. And we want to say a thank you to our funding, where it comes from the Southern Extension Risk Management Education and the USDA National Institute of Food and Agriculture.